Well, a couple of factors dominating global markets this week. Of course, one of them was the Federal Reserve's commentary around inflation, but also growth, and a little bit of contradiction with regard to the way in which the Fed chairman Jerome Powell addressed that key piece, which was largely around growth. He said at the moment he does not see US growth falling, but clearly they've downgraded the quantum of growth which they see coming through this year at to 1.7% from 2.8%, and from the 4% mark which they were looking at in terms of the growth trajectory this year at the end of last year. So a lot of those varied factors have led to markets declining sharply in trade yesterday. When I'm looking at the Dow, steep cuts seen. The Dow was down nearly 2.5% in trade yesterday. In fact, now below that 30,000 mark, definitely a cause of concern. And mind you, the Dow is now very close to its 11th week out of the last 12 in the red. So clearly in the midst of a large correction is where the Dow is at the moment, very close to 20% lower from its 52-week high. Moving quickly on to how the S&P 500 is looking, down 3.25% in trade yesterday and down 6% week to date is where the S&P 500 is, and the Nasdaq down 4%, seeing the steepest cut is where tech stocks are. Below that 11,000 mark is where the Nasdaq is now. Moving quickly on to Europe, the story is not different, but for Europe it was the first trading session after that commentary by the US Federal Reserve on both rate hikes as well as inflation as well as growth, of course. And we saw steep cuts on the FTSE, down over 3% in trade yesterday. The Stoxx 600 too was down nearly 2.5% in trade yesterday. So steep cuts seen there, and that's been the handover largely negative into Asian indices today, and that's where we've seen Asian indices as well. When I'm looking at the current structure, it's the Nikkei is down 2.2% in early trade, the ASX 200 also down nearly 2%, and the Kospi down over 1% or so. When we're looking at the only indices in the green at the moment among major benchmarks, it's the Shanghai and the Hang Seng. Shanghai holding on to around 1/5% of gains, and the Hang Seng down or rather up 4/5% is where we see it at the moment. Moving quickly on to commodities, the commodity story is playing out very quickly. Commodities had seen a quick rise but have now tapered off. In fact, the recession risk is what is pushing commodity prices lower. Oil came off, it's at $117 a barrel as we speak. Gold prices though are or continue to remain elevated. They've gone up a little bit after that recession risk fear. It's gone up nearly to that $1,850 an ounce mark. In terms of currency, the dollar index has come off quite sharply below the 104 mark as we speak. So some risk in terms of that. There's been a sharp retreat from 105 to below 104, and bonds in tandem have moved lower. In fact, the 10-year US yield now at 3.22%, which was not very far back. It was at around the 3.5% mark. So clearly some some headwind coming through across asset classes. And when we're looking at cryptos, they are the most beaten. In fact, Bitcoin just holding up above that US dollar 20,000 mark. So some pressure there as well. A largely muted start for the SGX Nifty as we are seeing it at the moment, but largely the global cues indicate a negative day of trade today.